This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here on a Thursday afternoon. I am Cesar Delgado. I am your host of today's program. We were taking a listening to the new NPPC President Duane Stelter from down in Des Moines, Iowa at the World Pork Expo. And then we were talking about the fundamentals and planting progress in Wisconsin. The commodities markets with John Heinberg from Total Farm Marketing. This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest.
NPPC's number one priority is ensuring economic certainty and long-term sustainability for pork producers. From local legislation to global trade, challenges facing producers require an approach to effectively influence policy and includes work at the state, the federal, the international, and at the corporate levels. NPPC's advocacy is focused on defending the freedom to operate and making sure every producer, regardless of their size or location, has a voice.
Duane Stelter is in central Iowa for the World Pork Expo for this week. He says that the NPPC continue to work with the White House in Washington, D.C. for policy is that it will be affecting to the pork industry.
Policy issues we face are not created in a vacuum. They often touch all four corners of our advocacy efforts. Unfortunately, Prop 12 is a perfect example. It shows decisions made at the state level can lead to problems that require a federal solution, and how corporate decision makers and even international trading partners can be impacted. When an issue of this magnitude comes along and cuts across each advocacy area, it's critical that we are speaking from the same page.
Duane Stelter is a new president of NPPC. He clarified that there are policies and biosecurity procedures for right now in the pork industry. The pork producers needs to be stepping up with their needs.
We continue to push a 5-year farm bill that includes a Prop 12 fix. We are facing the realities of workforce shortages on our farms and need visa reform to offset those challenges. We remain focused on new market access for U.S. pork more than ever in light of the new tariffs that make it more difficult for us to compete in a global pork market. NPPC continues to seek solutions that move our industry forward. World Pork Expo is a great venue to hear from producers from around the country on issues that are important to their farms.
NPPC is a voice in the room for the top priority and legislation in Capitol Hill. They have a full plate of their hands on Prop 12 to labor and biosecurity. The NPPC continue to push for their own priorities. More information on nppc.org. Thanks for the audio from the NPPC. We'll have a conversation about the grains and livestock markets with John Heinberg from TotalFarmMarketing.com. John, how are you?
Doing well. Busy day, but doing well.
John, let's discuss about the grains markets for today's corn markets. Could you tell us what's news for this corn markets?
Corn market right now, we've been seeing a little bit of money flow will come back in here last couple of days. December corn futures actually being the the leader in that side as we moved off our low here about 13, 14 cents from just a couple days back. Maybe just a little bit of short covering value buying here. We are in that seasonal window where typically we see a little bit of strength in the corn market. We're through the planting pace for the most part. We still have about 7 million acres out there that needs to get in. We'll see how that progresses over the week here. We're still watching some of those forecasts, some of those wetter areas, unfortunately, staying wet. Could be something that maybe the market will look at next week, as now we are in the month of June, as well as those crop ratings, which are a little bit low here, 69% good, excellent on corn this week, which is, again, below where we were last year at this time. So maybe this place here, the market wants to get out of their short positions a little bit, throw a little premium in that corn market. Be nice to see a good run here to give producers an opportunity to get some sales. I'm talking maybe moving up into that 460, 470 window. Might be a spot again. I'm going to be a seller on some of the rallies here. So that's what's at least going on in new crop corn. Old crop corn just continues to get pressured here. Feels like this market wants to take the premium out. Even though everything we read on the fundamental side, solid week of export sales this week, 900,000 tons. In fact, right now we're about 36 million bushels away from the USDA target here for the export sales for the old crop marketing year for the year. So we'll have to see how that plays out. We still got 13 weeks left in the marketing year to get the sales in. Market's anticipating seeing that ending stock number come down here next week on the USDA report as they make some demand adjustments. That's just been a limiting factor in this grain market, is the fact that July contract just cannot get any bid, down 4.5 cents on the week going into Friday trade, while December corn pushing about 10 cents higher on the week. So just again showing you that what we call bear spreading action. Over into the soybean side, we got a decent week going here. We've got July through 10.50 today, which is nice to see. November back through 10.30. We got some pretty good resistance and some moving averages sitting here. We're trying to fight through those. If we can, maybe we see a little bit more money flow in. One thing we are watching, Brazilian soybeans are kind of on the move here in terms of prices, as there still continues to be good demand now that harvest is kind of over. So if Brazilian beans start rallying a little bit here, which we've seen, that helps out U.S. prices as well. U.S. beans are actually fairly competitive on the export front for areas non-China, for like Europe, as well as into the Southeast Asia world, because of the tariffs or non-tariffs that are getting put in place. So maybe we continue to see a little bit of export business on those old crop beans. So that's why we're seeing maybe a little bit of premium here. Plus watching that soybean meal market, record short funds positioning, got a nice little round bottom forming. So maybe some technical buying could come into that soybean meal market. Lastly, wheat market too, kind of a choppy week, still firmer overall. As we go into Friday trade, I guess one of the biggest things out there is, are we getting too much wetness in some of those southern regions, especially with KC wheat harvest about ready to kick in here? Now, maybe we start worrying about some crop quality issues and things of that nature. So that's something we got to watch going forward here. But again, short covering kind of been the rule lately in that wheat market. We'll see if it can continue to find a little strength.
How is the fundamentals on the corn markets for this week?
Again, just touching base on that in terms of, and we're really kind of focusing more on that old crop supply here in terms of, is that July, that July contract worthy of the price that's sitting at here? And that's been a head scratcher in this marketplace, is the amount of selling pressure we've seen on that old crop corn, despite the good fundamentals on demand. Again, solid week export sales, ethanol grind, very good this week. Saw a nice pop in production. So curious to see where we're going to be in terms of those bushels on that USDA report next week for the old crop supplies. On the new crop side, again, obviously we're still thinking about big acres. We're still thinking about a fairly large yield, especially with the weather being friendly. So those are some of the things that have been just kind of weighing on the market. But like I said, it's been at least nice this week to see a little bit of money flow come into the corn market and getting us off some of those lows, especially in new crop prices. Like, hopefully we can get some opportunities for producers to get some sales in.
Of course, John.
Good start at this time frame. If the weather continues to be good, we're going to put a pretty good corn crop out there with the extra acres. We're going to meet what we need for the bean side as long as those acres get planted. We still got about 13 million acres left to plant as of last week's planting progress report. But again, if those kind of hold together, you're going to see a pretty good pile of corn. Again, the demand's going to be the key. And we're going to see prices get pressured, typically like we are. Unfortunately, there's some areas, if we come back through this window in that December corn and break break this to the downside, you're looking at some sub $4 corn pretty easily on global supplies increasing. We'll have to watch that. Again, I'm going to be a seller on rallies here. Just make sure we're protecting value for people on both corn and soybeans going forward.
Well, as we know that the cattle markets is getting ramped up, however, what is your thoughts with today's cattle markets?
Excellent day in the cattle market today. Big gains to the upside. We had a little bit of shakiness maybe coming into this today's trade with a couple reversals on the chart. You had that news regarding New World screwworm in Missouri and that false report that shook the feeder market last week. And so there's just a lot of things that made you kind of uneasy. So I continue to be a put buyer here. But boy, today cash trade just ruled the market overall. We're seeing 230 trade in the south. That's up $8 than last week. Northern trade still kind of getting put together, but I'm hearing maybe up to 240, maybe even a little higher. Again, that's a heck of a jump in the cash market week over week as the buyers continue to stay active, just looking for supplies. And that just fueled this strong rally in the corn market, the cattle market, breaking out the new highs today for lives and feeders with strong triple-digit gains. Now, again, maybe getting a little long in the tooth. We'll have to see, but the fundamentals are there between at least a strong retail market, strong cash market that keeps this market active here in the shorter term. As a producer, it's a hard market to work with flooring in because you got such a premium in the cash over the futures. Your best play is still doing puts underneath this market, keeping your safety valve floor in place in case something happens, a black swan event kicks in, and we see how quickly this market could roll some premium out.
Today is up for the feeder cattle. However, what do you recommend for the premium risk on the cattle markets?
Yeah, as I just touched base on there again, puts about the best way to go. I have a real hard time right now putting a sold futures or a short call over top of this cattle market because you could be easily chewing on some pretty negative margins in that regard in terms of margin calls as this market rallies into those positions. So again, right now, until we have a better signal, maybe some toppiness occurs, I'm using the put strategies underneath. Unfortunately, they're expensive. Okay. And again, they're going to be out of the money because of just the way the market structure is set up. But at least, you know, you got something underneath that the market you can work with. If we keep climbing higher, you got the ability to roll those puts a little bit higher and continue to build that floor up. Even though it adds more cost, you're still hopefully making it in the cash market in the terms of the animals on the hoof. It is, like I said, a very difficult market to work with right now because of that gap between cash and futures. But you got to have something in place because it doesn't take any more than a headline as we saw here a couple of weeks ago, and you can see premium dive out of this market quickly as the long positions run for the door to get out.
Do you have any final thoughts about this growing season?
Well, going forward, you know, obviously the weather is going to be the driver here in terms of price now. You know, keep an eye on those longer range forecasting. Problem with long range forecasts, you can have a dry forecast at noon, and by 3 o'clock time, they run the next model that's back to wet again. And so there's not a lot of confidence in some of those longer range models. So as a producer, I got my targets. I need to build floors, protect the value of the market, and when we have it in front of us, I know it's not there yet for grains, but maybe we're creeping up into that window that you want to make sure we can protect that downside just in case things continue to go well. It's all about balance right now in terms of your marketing plan. You know, if the market does X to the upside, what do we got in place? If it goes Y to the upside, what do you got in place? Same thing to the downside. What are your variables that you want to protect? Just make sure you have conversations with people like myself and develop a good marketing plan and let it go to work. That's my big recommendation going into the growing season.
Okay.
Thanks, John.
Thank you. Have yourself a great day.
We've been talking with John Heinberg from TotalFarmMarketing.com on back roads of Illinois. Thanks to John Heinberger from TotalFarmMarketing.com. This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. I am Cesar Delgado. You have a great day.